Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. I'm pleased that we have Jason Ayres with us today. Jason Ayres is the founder and president of OptionSource.net. So OptionSource.net, they are a leading educator, and of course they give a lot of education in options. So we learn a lot today from Jason, as we always do, and he'll be talking about volatility, how important it is to understand volatility when you're trading currency options or any other type of options. Without further ado, I want to introduce Jason Ayres.
Hey there, good evening, everybody, and thanks again, Steve, for the great introduction. It's always a pleasure to be working with you guys. We've got a lot of information that we've really tried to integrate into tonight's presentation. We're going to look at volatility, as Steve mentioned, and essentially how that influences your options premiums, and we're going to try to look at that from a strategy selection perspective, but we also wanted to integrate a little bit from a technical perspective as well. So I tried to do my best to incorporate everything into a 1 hour presentation. Hopefully we've been able to achieve that. I wasn't able to cover all of the strategies that I would have liked to have, but at the end of the day, really the way we look at approaching our options trading is keeping it really as simple as possible, because those kinds of strategies are the easiest to manage and allow us to navigate in and out of our positions more effectively. So moving forward, as Steve mentioned, we're going to talk about profiting from any market direction using FX options, and the ISE has done a fantastic job at putting together a market for currency options that allow us to really apply many of the same strategies that we would look to apply in the standard equity options market, other than, of course, the covered call strategy. So you can take what you know about equity options trading, and you could really migrate over into the FX options market very easily with that information. Now, in saying that, we're going to look at some examples, of course, this evening that are quite relevant to what's happening right now. And I just want to reinforce that it's, of course, for educational purposes only, and you really want to make sure that you educate yourself as thoroughly as possible before you go in and start clicking the buttons in a live trading account. Now, with that said, just a little bit of information about the ISE FX options. First of all, what makes this market very attractive is that these options are accessible through most of your standard option brokers. So if you already have an equity options account with a broker, then you should very easily be able to access the FX options, and you can see that there's a list of the currency pairs and the symbology that goes along with each of those currency pairings. The ones that we're going to focus on tonight are specifically the more popular ones that from my perspective anyways, but recognize, of course, that they are U.S. dollar based. So, for example, when we look at the EUI, which is the U.S. dollar euro, recognize that if you're somebody that's coming from a typical spot market forex trading background, that the base currency is flipped, and we're looking at U.S. dollar strength versus euro. And again, the ICE has done a great job at standardizing these different currency pairs to make it a little easier for us to understand. It's really all about U.S. dollar strength and weakness. Now, what makes these also very effective is that they're cash settled in U.S. dollars. So realistically, any profit that you may generate from any particular strategy, or loss that you may incur for that matter, is essentially U.S. dollar based. There's no securities that actually change hands, and so it makes it a little easier for an individual to understand with respect to the expiration cycle and what happens at expiration. The bottom line is They're cash settled in U.S. dollars. Now, along with that, they are European-style exercise, which simply means that because there's no underlying security or underlying shares that are represented by these particular the pair value charts that we look at, we have to recognize that they are essentially European-style exercise, meaning there's nothing to exchange hands. It's just simply cash settled. So on that note, as you can see here with this particular chart, there are a lot of different pair values that you can actually take a stance in with respect to your particular view. Now, we mentioned a little bit about considering volatility when it comes to making your options trading decisions, and I think for many novice option traders, the concept of volatility is sometimes a bit of a challenge to understand. And in fact, we spend many hours with some of our presentations really just diving into the impact that volatility does have on an option contract. But it's really easy to kind of get a general grasp on that and use it on the concept and use it very effectively when you're considering your strategy selections. Now, the first thing that we have to understand, of course, is that there are two types of volatility that we consider when referencing the options market, and this applies both to the equity options market as well as the FX options market. Now, historical volatility is it's a quantifiable measure of the security's deviation from its average price over a period of time. So in other words, we can look at what's been happening in the U.S. versus the Canadian dollar or the U.S. versus the euro, for example, and we could quantifiably measure how much the pair value has been deviating from a specific average. Now, with that in mind, typically options are priced based on an anticipation of volatility. So in other words, we have what's referred to as implied volatility factored into the options contracts. What that means is that the market steps back and really more or less assesses what the probabilities are of how much that particular underlying is going to move over a certain period of time. What happens is, in an environment where the expectation is that the pair, for example, when we're referencing FX options, is going to move very quickly or very aggressively away from the average price, we see that expectation factored into the option premium. So although the move has not actually taken place, it's that expectation or that implied volatility that will influence the value of the option contract. Now, under periods of expanding volatility, really what we're seeing here is a change in a market environment. As I mentioned, we might be looking at just some sort of a global economic influence and an expectation that there's going to be some sort of a political news or some economic news to come out that may influence a particular currency value, or we may. It could be any number of factors, but the idea is with that in mind, what happens is the anticipation of a move influences the volatility of an option contract, and we see the implied volatility of the option contract adjust and expand and influence the price of an option contract. So as volatility expands, the option premium will increase, and it's really factoring in the risk that the market maker has to take for assuming the other side of the transaction. And it also has to do with, of course, supply and demand factors. In other words, if all of us as retail investors or traders, for example, expect the U.S. dollar to strengthen, and we go in and we start buying a lot of call options, well, we'll also see the demand for those call options influence the premium value outside of any move in the underlying pair.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.